this market's still emerging. It's still new. 5 years ago, people weren't investing billions of dollars into, the funds that were buying up the Patriots and the Cleveland Cavaliers and et cetera, right? That wasn't happening 5 years ago. This is still a new thought process. This market is exploding with capital right now. The fact is that we're so early. It starts from the top down, and the top down means buying stakes in teams and organizations and leagues. Because now, when that money comes in, it has to trickle down to affect every other part of the business. Let's not forget that the New England Patriots are a business. The Houston Texans are a business. And so when that capital comes in, it's just like receiving an investment from us to a founder. It's like, I'm putting this money in so that you can spend it to make more money and grow. How do we have that to happen? The same thing is happening as they invest in these teams, and that money needs to flow downward. Now you're talking about what are the products that they're going to use beneath that infrastructure of those teams, and that's where the market's really going.
Hello and welcome to Fireside with VC. My name is Andrew Romans, and today we're with my friend Chris Wilkerson, who is the founder and GP at 51 Ventures. 51 was Chris's jersey number, his number when he was an NFL professional football player before becoming a venture capitalist. And we'll get to his story in a second, but Chris has created 51 Ventures around, he's a specialist around sports and sports tech. And sports is a big business. It's a very relationship business, and this guy's the perfect guy for it. He was actually on tour with me on our VC Roadshow where we went to Frankfurt, Munich, Zurich, Geneva, Monaco in 1 week. So I've actually heard this pitch now quite a few times. I've been on trains and planes with the guy. So Chris, welcome to Fireside. Thanks for coming on the pod.
Yeah, Andrew, appreciate it, man. Europe was fun, by the way, so that was good. We got a lot of quality time, I would say, on the trains, planes, and cars. We took every boat of transportation, I think, except for a boat. So.
Are you leaving on helicopter? There was a chopper from...
Yeah, we did that too.
Yeah. Well, Chris, well, great. So hopefully we'll get you on the road again. But so orient us of what is sports tech? Like, we're not talking about buying the Nets or the Yankees. Explain what it is for a venture capitalist like yourself operating in this arena.
Yeah, so I think, like, when we talk about like sports as a whole, a lot of people start framing it into like the team and league ownership piece of stuff. And to me, that's great and that's fine. And there's a lot of money that's flowing into that realm. The catch is that there's things that make those teams more valuable. And what makes those teams more valuable? It's the athletes performing better on the field, on the court, whatever that might be. And it's the fans continuing to spend their money, show up at games, attend events, and create fandom, right? How do you enact with those? Well, it's the technology that those teams, leagues are operating on. So the technologies that interact with the fans, the technologies that create better player performance, the technologies that are in their weight rooms, the technologies that the athletes are using to track their sleep. And then that's how we talk about it, as in, there is the everyday athlete and there's the high performing athlete. There's the ecosystem in the middle of products that they both use. And when they do that, it creates the everyday athlete is also the fan. And so now there's this unified experience, that the ecosystem of products that live in the middle. And that's where we focus.
And like, what are some actual examples? Like, maybe even like one or two of your portfolio companies that gives us a taste for like what we're really talking about. Like, what do these companies look like? I realize they're all over the board, right?
Yeah, totally. So I'll give you like two maybe different examples, right, that kind of cover both spectrums there. So first, talk about from a team league perspective. We'll talk about like We Played. So We Play Sports. They take and aggregate all of the video in from wherever a team streams their live video, from ESPN to Huddle to Flow Sports, right, Fox, etc. Takes all of those streams, and their platform actually cuts into and creates moments based on plays and actions that happen within the actual game itself. Now what the team is able to do with that is their communications department can put that out onto a feed and be able to continue to update fans on what's going on in the game. On the flip side, now they're able to monetize those moments. They can create those moments as very siloed or very limited releases as to what's available. They may only create 25 moments of Texas A&M Hail Mary versus Texas, right? In the fourth quarter, Hail Mary wins the game, and the Aggies win. All of a sudden, there may only be 25 moments, and there's a price to pay for the fan to have and create that moment, because everything outside of that is IP, licensing, media rights, and now only 25 people are going to have access to that. And so that's kind of a unique aspect. Then on the other side, you talk about the performance, and you talk about a company like Pisen. And so it's a wearable where it tracks, yes, it tracks your heart rate, recovery, sleep, etc., calories you've burned throughout the day. Also for them is a cognitive function. So it detects like cognitive delay throughout the day so that you now understand as a human being when you're fading during the day or when you're sharpest. And understanding that allows you to prime your body. And that's something that from a high performing athlete perspective obviously is important, but also a lot of high-end execs, right? Talk about us, like we want to know when we're on point walking into a meeting or not on point. Maybe we have to focus up a little bit better. Maybe I need a cup of coffee. Maybe I need to eat, whatever that might be. And understanding that as a human being is really important. So kind of two different ends of that spectrum there, from a team perspective and from a personal perspective, performance side of things.
So there's the whole, sports is entertainment. It's live entertainment often. It's communities. It's a lot of people. It's fanatical fan loyalty. But a big part of what you're doing is tapping into that and just getting into health and wellness, right? Isn't health and wellness? I mean, I guess you already told that with this example.
Yeah, I mean, those markets are huge. I think we're in the 7 trillions to project it out to 12, 15 trillion, because a lot of general consumers want to take health into their own hands. And that's a huge understanding here the last few years. So it totally speaks to itself. For example, we could talk about Whoop, right? Like Whoop did a great job early on at starting on pro athlete risks and conquering that, because everybody understood a high performing athlete wants to understand how their body's moving, the way their body's moving, how they're training, how they're recovering, etc. But then it took a little bit of adoption a few years later where, the average Joe who's running marathons, the average Joe who's hitting the weight room every day, not understanding why they feel so fatigued, not understanding why their body's hurting, not understanding the impact that some of those movements are having on their body over time. And so now he realizes, hey, LeBron James wears this Whoop. Why don't I wear a Whoop? And I could probably understand what's going on with my body a bit better. So the health and wellness side of things and consumers taking health into their own hands ties directly into what a high-performing athlete does day in and day out.
Okay. And maybe you'll take a pause before going to the next question, which I want to talk about relationships, but maybe, I have a couple of professional athlete LPs in our fund at 7BC, and I found developing relationships with their friends has been going slower than I might have liked. Like, it takes a lot to get this guy from LSU to trust me with his money. So, relationships matter in every industry, no doubt about it, from Istanbul to Osaka, I'm sure. But maybe talk about relationships of, the locker room kind of vibe. And before doing that, actually, give us your quick story. So tell everybody what your experience was with startups and with, being an athlete.
Yeah, I think the story will chime into the relationship thing pretty good, right? So I go back to the beginning in college when I showed up to Stephen F. Austin, where I went to school. I came on scholarship as a long snapper. That was all great. Pre-NIL, we didn't have NIL money floating through, so I definitely wasn't getting paid, right? Like I still needed money, and I always tell everybody I come from the opposite of money, which is no money, which means I need to still figure out a way to make it. And so I'm mostly crazy, not all the way crazy. And I showed up on campus, and our senior kicker at the time, great friend of mine, still to this day, but killed me, right? He was like, hey, if you're gonna snap for me, you're gonna be a Pike. And I'm like, no, not rushing a fraternity. And the important piece about that is that he made me, for what it's worth. I show up to the first meeting that the Pikes had on campus with some of the alumni kind of getting things going. And they were going through a checklist of items, things that the chapter needed to make sure we had set up, get going again, or make better. And one of those items that we needed to revamp was a website. And they'd allocated $3,000 to be able to pay for a new website. Me, no NIL money, was sitting there thinking $3,000 is like a year worth of everything I need. Legit. Like I can survive on peanuts additively. Like I can definitely figure out how to build a website for $3,000. I may have just bought a computer 2 weeks ago, but I could totally figure this out. Can't be that hard. So I raised my hand, and that was how the whole domino effect happened from there. So I raised my hand. They write me the check. I go home and I start teaching myself how to code and build websites, because this is before AI and everything was a thing. And so I just had to figure that part out. We put it out, and then all of a sudden there was alumni, past Pikes, things like that were like, hey, we have a law office. I was a former Pike, would love to revamp our website. Hey, we have a car dealership, SFA alum, we would love to revamp our website. Who made this Pike website? It was really good. And they're like, this freshman on the football team that's a Pike, do you want to meet him? And then I would go on these calls, and people would say, cool, what do you want to charge me? The answer was always, for a long time, how much do you want to spend? Because it's more than the zero that I had, right? And I was super flexible about that. And I was just like, this is incredible. And so that was how it started. One thing led to another. I started getting too much work, started pulling in some buddies to try to help me. When I found out about Fiverr, started outsourcing some of the work, and then understood that I could find really good developers, teamed up with now one of my best friends, and he had a development team, and kind of took off from there. Fast forward 5 years, we were running a full-blown agency with 40 developers on staff, and we were working with a ton of startups, and that was kind of how I got my feet wet in the startup industry of understanding like how this game got played early. Well, I wanted to go play football. I knew that. Didn't want to be a nerd my whole life, because who wants to do that, right? And so I'd met with 30 of the 32 NFL teams at the time, and I always tell everybody it was the Eagles and the Steelers that didn't come meet with me. No harm.
Right.
But at that point in time, I was like, I can't run this company, anymore. Like, I'm going to go play football. And so we kind of shopped that deal, and we had a larger agency that ended up buying that business from us. And that was great. It gave me a little bit of runway to be able to chase the dream that I wanted to go play. And so I landed in San Francisco. I landed in Tennessee right after that in 2021. And after a little bit of that 21 season of working out for teams back and forth, I think one of the things people don't understand is that if you're not one of the top, 20 guys probably on a team, you're in and out. It's kind of like a pony show every day. You don't really know if you're going to get cut. You don't really know if you made the 53-man roster in preseason. You don't really know if you're getting a paycheck next weekend, or you're going to be on a practice squad getting half of it. You don't really know. And it was stressful, and it was just kind of a lot. And then 15 workouts later, not getting signed, and all good things. There really wasn't anything. You're just like, I think I'm done. I think it's time for me to go kind of do my own thing. And I just kind of woke up one day and I was like, I'm gonna do my own thing. And so I built this company called Sideline, and Sideline was this recruiting automation software content distribution platform. And so coaches could essentially create content to be able to automate and send out to recruits, personalized through text messages, emails for official visits, game days, etc. And that platform did well. We ran it for a few years. About year 4, we were offered to be acquired. We ended up selling that business. And then that was a couple of years ago, where I looked up and I was like, doing a couple of SPVs with buddies of mine that were still playing and things like that, where a lot of those deals start in the locker room, which is the unique side for us, where, that unique access point, and I can talk more about that later. But that was where I understood that the relationships on the athletics side, from like an AD perspective, a coach perspective, Sideline brought a lot of that to me. And then on the flip side, I already had the athletes, and I already had the people that were playing that I played with. And so all of a sudden, those relationships mattered to a lot of other companies. So we would write a check to a company through our little SPV, and then they'd be like, hey, could you introduce us to, XYZ University? And you'd be like,
right.
What do you mean? Like, that's not difficult, right? Like, yeah, of course. And then they'd get the deal done because the school trusted us. The product was good, and it would make a lot of sense. And you're just like, that's it. That's all we had to do. And you're like, that's not hard.
But Chris, you don't underestimate it. So there's kind of two things we're digging into here. One is relationships. We didn't really cover industry expertise, which I'd love to bring this out, where like hanging out with you in trains and restaurants and stuff in June, you're speaking a language like you're some put call options trader, which you actually were, with the way that industry runs and how it's different in Europe with soccer, football versus
Yeah.
NFL or NBA and all that. But the relationships translate into a value add. So
Yeah.
relationships is probably obvious. If you're in the locker room, if you're in a box, every single weekend you're box seats next to some coach that might be an LP or something. So the relationships are key. But give an example of the value add, because this is actually the same for every VC. Every
Yeah.
VC needs to sing for their supper and justify why they're in that primary, why they're being allowed a stock transfer on a secondary. What value do you bring with your network and those relationships?
Yeah, I mean, it's everywhere, right? Of course, like everybody needs to, and a lot of VCs say we add value, right? Well, how? And
Everyone does. It's on every goddamn website.
yeah, and I wanted to hammer home on that because I felt like it was a little bit different for me, right? Where I was like, no, I'm adding value because I've actually sat in your chair before, recently at that, right? I've sat in this chair, done this, and I've sold to these universities, I've sold to these schools, I've sold to these leagues. And I have the relationships on the other side for the different types of products where it's like, hey, I have athletes that can help promote this product. I have athletes that can walk into any room that you want to be able to be in. I have athletes that have good followings. They're all friends of mine. It's not a difficult conversation to pick up the phone and call John and say, hey man, like we want to do this deal and we're trying to get them in front of some more people. Cool, let's post about it, let's do a thing, right? But it's because years and years of trust was built through the relationship that I either played with them, was they were one of my coaches, they were on the staff with us, and you're like, they don't just trust people, because they're getting sold stuff all the time, and they you come across bad eggs everywhere, and so who do you trust? It's the guy that you've been with for the last 10 years, 5 years, 12 years, whatever it is, and you're sitting there looking at it, and you're like, stare down the barrel, and you're like, well, if I'm going to look at Andrew or Chris and I'm going to invest in one of these, I'm only going to invest with Chris because I have no idea who Andrew is. Andrew returns look great, right? Like his fund's doing great stuff, but like I have no idea what he's actually done with it. And to be fair, a lot of these guys don't really care either what you've done too, right? They're like, listen, at the same time, this is my guy. Like they say like adversity and dealing with adversity with somebody is what really builds a relationship, right? Like in totality. There is no replacement for competing at the collegiate level or professional level when you are running gassers across the field with your buddy and you're on number 20 and you're both sucking wind and you got to get through it. And if you don't make your time, you're going to run 10 more. There is no other feeling like being out in 20-degree weather at 4 a.m., running wind sprints, diving on the ground with the guy next to you, right? Like there's no replacement for that type of relationship. And so when you do that with these guys, it becomes a whole different set of skill relationship that you've built, and being able to walk in those rooms is important. And sometimes I would forget about like, hey, that's the reason I'm able to call him because we were together on the field at 4 a.m. right? And so that's kind of one of those unique athlete little circle things, I would say.
Yeah, Chuck Newell, co-founder of NEA, said in this podcast that startups are the closest thing to combat. And he lost half his men on Hamburger Hill in Vietnam, and you know it when you meet the guy. But so what you're talking about, you kind of been through combat with these guys, and it's beyond founder empathy. Okay, well maybe talk about the industry itself. I mean, kind of like the total addressable market, the size of the market, maybe some of the unique characteristics of the market you're operating in here.
Yeah, I tell a lot of people I like to throw numbers out the window sometimes. I'm probably sometimes a bad VC for saying it, whatever you want to call it, but a lot of times I want to throw the numbers out the window because this market's still emerging. It's still new. 5 years ago, people weren't investing billions of dollars into, the funds that were buying up the Patriots and the Cleveland Cavaliers and et cetera, right? That wasn't happening 5 years ago. This is still a new thought process, right? And so this market is exploding with capital right now. The fact is that we're so early. It starts from the top down, right? And the top down means buying stakes in teams and organizations and leagues, and that's great because now when that money comes in, it has to trickle down to affect every other part of the business, because these are businesses. Let's not forget that the New England Patriots are a business. The Houston Texans are a business. And so when that capital comes in, it's just like receiving an investment from us to a founder. It's like, I put in this money in not so it sits in your bank account. I'm putting this money in so that you can spend it to make more money and grow, right? How do we have that happen? The same thing is happening as they invest in these teams, and that money needs to flow downward. Now you're talking about what are the products that they're going to use beneath that infrastructure of those teams, and that's where the market's really going. There's a ton of stuff about how this is going to be a $10 trillion market in sports tech, specifically $20 trillion, and it's going to continue to grow. That's great. What we're seeing now is the billions that are poured in, and it's showing its head in itself. I don't think we've quite even grasped how big this market is actually going to be over the next 5 years. Every day you look up, there's a new $1 billion announcement. So,
yeah, I mean, like, I wrote a book on corporate venture capital, and people are surprised to hear like John Deere Tractor Company or Campbell Soup have a corporate venture capital division where they're investing in startups. And the truth is, when you think about it, it's not just Intel with Moore's Law with their, CPUs and Microsoft needing to have a venture unit. Every business is a venture business. Or sorry, every business is a technology business. Like Bank of America employs more IT people than Google probably. So, if sports is a big business, and especially if in the last 5 years we're seeing a lot of capital pour into it, it's about time they start figuring out how to apply AI marketing, leverage that community, get more out of it,
And like many industries that are out there, the day-to-day, like blue collar industries, right? They're behind, right? Sports is behind from a technology perspective. ChatGPT's made its way into a lot of companies now through OpenAI APIs and calls and et cetera, that these companies are setting up and structuring and building off of that. It's made its way into a lot of financial, fintech, et cetera, healthcare, even like. But sports, it's still pretty new, right? I mean, I would say in the last 2 years is really where we've seen AI and automation itself start to take hold, where people feel comfortable in the automation of. It still doesn't totally understand sports. Like you've heard me talk. Sports has its own little language in that.
Yeah. I mean, you proved that to me. It was like talking to some Wall Street trader, some crypto. Yeah, so you got to be fluent in this language to understand the dynamics.
And that's what the dynamic of that is very difficult. And that's why I think a lot of these LLMs have not really achieved that just yet, because it does take a unique skill set to understand both sides, right? How do you actually develop a product and build that product based on the actual knowledge that you know? If you're not the same person that knows both really well, there's always going to be this gap and this barrier in building said product. And so that's where the uniqueness, I think I've been fortunate from being a product developer to the other side of like actually knowing it, that I can actually put 2 and 2 together from a knowledge standpoint and the execution standpoint. That's a rare find, and I understand that now. And I think that's where the barrier still is, because there's a lot of AI products that are trying to make their way into sports, but they don't speak like a coach does. They don't talk like an SID does. They probably don't even know what an SID is. They don't know what the athletic director is trying to do with NIL. And so understanding and putting those two things together is still.
When I was CEO of a company that was venture backed, we had raised like over $100 million of funding, and we were going through PR firms. We would hire a PR firm. Our VC like forced us to spend $25K per month on a PR firm, if you can believe it. It was like it's just so stupid, right? I mean, that started off in the late 90s. I finally said, like, to hell with that. I'm going to stand up to my VC and not do it. But we found that even like your PR firm needs to understand like packet switching and signaling gateways and the weird stuff we were doing. But like if the PR firm doesn't really understand next generation networking architecture like that we were in, then they're fired. And who you bring into the orbit of your startup is like some of the most important decisions you'll ever make as a founder. So if you bring in a VC who doesn't understand, what has changed in sports in the last 5 years and doesn't speak the language, can't pick up the phone and help you boost sales and grow your sales, then that's probably the wrong, VC for you, right?
Yeah, I think it's, I've seen some investors that don't understand. Like, for example, if you're a B2B SaaS product that's selling to the collegiate department is your initial customer base, right? That's great. There's a lot of successful products that can do that. But if you're investing in a product and you don't understand why they're not making money in February, March, April, and May, and you're freaking out and you have no understanding, and you're like, we need to get to a monthly revenue, right? Like we need to get to 40K a month, 60K a month, 100K a month. Like, good luck trying to get that to happen. That doesn't exist here. All of their revenue is going to come in from June, July, August, and September.
Seasonality, right. Every industry's got its seasonality, yeah.
And so, like, there's no way to approach it as like a general VC from like, where they may have monthly recurring revenue. It just doesn't exist, right? It's just very rare and find in the sports industry to have a monthly recurring revenue product. That's very difficult, especially if you're going to see it be a B2B product. It's going to sell in those 4 months. And the sales cycle is probably really long, because if you talk to them in September, that doesn't mean you can get a check in September because, hey, we just heard about you in September. We actually set our budget back in March for this year already. So now we have to wait all the way till next year for you to actually physically be in the budget. But we want your product. You got to figure out a way to be able to get them on your product now and be able to delay that or upscale that. And you've got to have some really creative terms when it comes to some of these departments as well.
Yeah, well, listen, man, I wouldn't go into a sports deal without showing it to you first. And if you're not coming in with me, I'm not going into that jungle. I'm excited about what's to come. So, look, hope to have you on, our next road shows, and great seeing you and exchanging deal flow. So, thanks a lot, man, and see you in person real soon. Hopefully, at one of those games, get me in the box, and we'll be sitting next to the coach.
We'll have it happen. Don't worry.
All right, buddy. Okay, bye for now. See you.